Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. So you want to manage risk in a way that makes sense to you. And there's some tools built into our web trader and our app that help make that easier. If we go through some maybe trade examples during the session, we'll run through those tools that help you to understand your overall risk, to your stop loss setting, your potential profit based on trade size, as we set up the trades that's there in the order window for you. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both MT4 and MT5 accounts from one location. And the same is true with our mobile app. You can find it under the trading platform options. It's located in the major app stores, so you can just search for it, or you can follow the links from our website to the app stores for your mobile devices. And all the same tools that we use in the web trader and that you'll see today are in the app. So whether that's the free signals that are coming in, the market buzz, the advanced economic calendar, the news feed that comes in, all of those things are available in the app as well. Now, if we log in here in the upper right corner, then we'll be in the web trader itself. Now, today's session being a technical analysis session, we'll lean kind of heavy on the technical analysis in a simplistic way though. But also we probably should consider what's happening fundamentally with the news of the day, just to get a feel for the sentiment and what's happening. If you haven't looked at the charts today, what I can tell you is there's been a bit of volatility, a little more than average, I would say. And a lot of that, I think, is centered around the fact that NVIDIA will be reporting its quarterly numbers at the market close today, when the US market closes. Certainly the trading will still be open on a number of instruments with AvaTrade, and you can take advantage of the effect that data might have on the charts. NVIDIA itself won't be tradable being a US stock until the US market then opens for tomorrow's session. But certainly some of the major indices, especially the US indices, could have a large effect in response as that data comes out. And you know, it's interesting. I looked at some numbers on NVIDIA's earnings over the past months and years, and you know, up from about 2021 to mid to late 2022, NVIDIA exceeded expectations by more and more on the earnings per share and the revenue. And then in the past year or so, they've exceeded expectation on both of those numbers each time, but by less of a percentage in terms of exceeding what was expected. And it's worked its way down to last time, I think, under 10% above the expected numbers that came in. And so I'm wondering if that trend continues, if maybe they may disappoint today with their numbers. And maybe that's what some of the volatility and fear is about, because there are some other companies that reported quarterly earnings, like Target. It's a big retail store in the US, and a lot of times stores like Target and Walmart have a good gauge on what's happening with the US economy because it's right at the consumer level. And Target missed on both earnings per share and revenue in a pretty big way on the earnings per share, and pretty significant on the revenue as well. So I think that puts some fear into the air, as well as now we're waiting on the NVIDIA numbers at US market close. So I think that's playing into some of the fear that's there. I think we've seen gold with some safe haven bullish movement upward after quite a bit of dropping in the past days. And I think we've seen some strengthening of the US dollar, which sometimes works as a safe haven type currency along with the yen and some other currencies. So I think that's the basic sentiment right now. Volatility's up a bit. There's some fear about some of these earnings numbers, and maybe also about what's happening with the Ukraine-Russia situation, with the US opening up permission for Ukraine to use long-range rockets into Russia, and Russia mentioning some things about changing their nuclear missile doctrine, and alluding to the fact that maybe they reserve the right now to use nuclear weapons against Ukraine and maybe elsewhere. And then we've got the hot war situation in the Middle East as well, with some rumblings about Iran readying missiles potentially in Iraq to potentially be shot at Israel, and maybe some whispers about preemptive strike against Iraq then from Israel. So multiple storylines maybe adding to some volatility on the markets. And I think the most direct thing that's being looked at right now, the most immediate story anyways, is NVIDIA, which, in just a matter of hours, we're going to see what their quarterly numbers are like. Okay, so with that as a backdrop, now we can go into the technical analysis and understand a little bit better why the movements have occurred the way they have so far today. Take a look at some of the technical signals and see if we agree with those signals or not, and if we like the entry points or not, based on how we understand the current volatility situation. Okay, so we can start picking instruments that make sense. The US 500, maybe the US Tech 100, which is the NASDAQ, could make sense as well, especially with NVIDIA coming out. The US 100, the Tech 100 is tech heavy, so it may affect movements on the US 100 maybe a little more percentage-wise than something like the US 500, but they tend to move in the same directions for the most part, maybe not the same percent changes. Now, one-day candles, similar to what we saw with gold, we saw a pullback and then a bounce, but let's take a look a little closer maybe at one-day candles, and we can see, 1 hour candles, I should say. We left the one-day candles, and we see here's the drop-off coming into the week, and so far this week having trouble going back up to where it was last week. Okay, we see Friday began the dropping on Friday, and that continued into this week, and then here we are kind of ranging now between this level here and this level down here. Okay, so we see resistance here, support in this area, back up to this area of resistance and back down towards the support down here with a bounce back up. Really sitting and waiting now for NVIDIA is what this looks like. And so we can take a look at the signal for US 500, and it's calling for a sell with pressure downward. And maybe that's tied purely to the technical breakthrough that we saw here, this broken support, and it pushed back up and respected the pivot line, which is the resistance level now, and it seems to be pushing back down. And so, the pivot line that is put here, as long as the movement stays below this pivot line in the signal, which is the first level of resistance up, we see that here, resistance, okay? Resistance, resistance, and respecting that resistance. So the pivot line is actually a little further down, 59.25, which is here. Okay, this is the first line of resistance that's identified in that signal. So this was the breaking of this price line, and here's the push back up testing it, and the signal came out saying expect further dropping as long as it doesn't go back above this price. Okay, and so it's still a valid sell signal because it did not break back above the pivot line. And it seems with the volatility index as high as it is, and the fear that we've been talking about, the strengthening that we've seen of the US dollar, that maybe the fundamentals are in line with this sell signal. With one caveat, it could completely reverse based on how NVIDIA comes out in a few hours. So this is for sure, in my mind, a short-term trade that I want to watch. If I enter it as a sell right now, I think it looks good, but I would be looking to get out of this in the next few hours before those numbers come out from NVIDIA. Okay, and so we've got several hours on that. So if you were going to sell on this with this setup, So I'm looking at a short-term move, sell, take profit. I'd be looking down here at the first support level. This is where it was just a few hours ago, 58.82. Doesn't have to break today's low to hit my take profit. That makes sense when I'm looking at it at a short-term opportunity. I'm typing the stop loss instead of the take profit. Here we go, 58.82 for the take profit. Stop loss would be above the pivot line here. Okay, this is the first resistance, and the signal says if it breaks above there, then it's an uptrend. Then the momentum changed. So above 59.25. So if I say stop loss at 59.30, it gets me above that pivot line. So I'm risking about half, maybe a little hair more than that, compared to what the potential profit is. Potential profit around 4,700, risk around 2,500, 2,600, and it's changing by the second because the market's moving. Now, I can adjust my trade size to be the amount of risk I'm comfortable with. So this is what I was explaining, that within the order window, the risk management side of things is made easier. So if I trade a quarter of a lot with this setup based off of the signal, now I see I'm risking 450 to try and make 743. Okay, maybe I'm willing to risk a certain amount per trade. Let's say in my case, 1% of my balance would be about 600. So let's say I want to risk 600 per trade, then I know I can do a little larger trade size because right now my risk is around 450. So if I go 0.3, now I can check and see, okay, I'm risking about 550, 0.35, and I can zero in on the trade size that's right for me. So 0.32, and that gets me right about 600, right about 1% of my balance. And you could want to trade, maybe risk 0.5% per trade or 2% per trade, whatever that amount is for you. But at least you'll know before you take the trade what you're risking and what your potential profit is to the prices you've entered for stop loss and take profit. Once I have that set up, then I'm ready to go. Okay, so now I've got my trade activated. I've got my stop loss above the first resistance level. I did not choose to put it above the bigger resistance up here because it's a short-term move in my mind. If it breaks this first resistance, I don't want to risk all the way up this distance to this stop loss because NVIDIA is releasing soon. Okay, I want to try and catch the momentum of this signal and the bearish negative pressure that's out there right now that I've seen today. I want to go with this signal because from a technical setup, it seems to be opportunistic to sell, and fundamentally, we already reviewed before we looked at the signals. It seems like there's a bit of fear out there, volatility with a strengthening US dollar that's helping right now to pull the US 500 down. Okay, and if we take a look at gold, we may see that gold has been climbing as well as a safe haven with some of this fear. Okay, so, and that's not to mention the war situation in multiple places that there's some nervousness about as well, that also could play with this move of a sell on a major US index. Okay, so for multiple reasons this looks okay. And by the way, if you take a look, and maybe you've moved into profit, maybe you haven't, but if you take a look at your open trades in this section, you can easily adjust things right from the chart. So as I look at this trade, if I want to make some changes to my stop loss, my take profit, when I'm looking at my open trades, I can just drag my stop loss up and down without any trouble, and it'll adjust on the fly. I can also drag my take profit up and down just by left clicking and dragging it up and down, right from the chart, just like you can do on the MetaTrader platform. So I don't know if some of you aren't aware of some of these features, but when you're on the chart in the open trade area, then you can drag those lines around. If you're on the chart not where the open trades are, then you don't see those lines. Okay, even if you're looking at the instrument that you traded on. So you have to go to the appropriate location to be able to take advantage of some of those features. Okay, so what else can we look at that's relevant? I mentioned gold as a safe haven has been looking a bit bullish today as the volatility has risen. So makes sense, and there we see gold pushing up as I speak. What's the signal? It's a buy signal, and it's almost hit the take profit. We see the pivot line is way down here. It's been climbing for a number of hours, and now we see that the current price is right up here. Okay, we're near the take profit zone, which is between these two green lines. And you might ask, why would the take profit be at this price level? And sometimes you need to go to larger candles to answer that question. So right now I'm on 1 hour candles. If I go to say 1 day candles, perhaps I can see over here that there's a level of support or resistance off to the side around that price level. And what we see is around 264. Over here in the past on the 1 day candles, there was resistance, 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 resistance to any upward movement for several days before it broke above that price. So we see in the past that this price level offered resistance for a few days before it broke above it. So that's why as this approaches that price, you may be seeing a recommendation that maybe you look to take profit for a shorter term type move because it may find some resistance. And you see it's even labeled as a resistance line in the signal. You don't always see in the image of the signal why or where that resistance shows itself. But if you go to the bigger candles, say 1 day candles in this case, you can see that that resistance level was back a number of days, but it does exist at that price level. And that's where the technical resistance comes, and the recommendation of maybe taking profit on a shorter term move might fall within this zone. Okay, and 2675 is the top of that take profit zone. And again, we will find on the charts that there is a spot where in the past, the movement had trouble breaking through. And we see here on this candle where the price went up, hit, and dropped back down. Tested it again and dropped back down. So in this zone, there's a relative large amount of resistance in the past before it was able to break through and up above that. Not saying that it couldn't break through, and it very well could, but it might find some resistance based on the past technical analysis within this zone. And that's why in this signal, they're saying if you do buy with this move, you could think about take profit in this area based on the past candles. Okay, it's a technical recommendation of where that take profit zone was created. Okay. So the question is, would you be interested in this? You can see how much gold has risen now after dropping for several days in the past couple weeks. Now we see a rise back up. And it really looks like to me that a more major resistance level, a more recent resistance level is here. Okay, closer to 2685, because this was a support level for 2 days. And then look at the momentum of this drop here. That was a really momentous drop. And so if I was buying on this, I might be a little more patient with my take profit and look to get it up closer to 2685, which is where this really plunged from going back a number of days. Okay, so this looks to me like if it is going to be a bullish move, it could challenge 2685 up here. Now, do I like this entry point is the other aspect of this signal. And honestly, I don't like the entry point. Why? Because it's risen so much already today. And also for about 4 trading days in a row, gold has been climbing back up. And so it almost feels like it's due potentially for a pullback from a larger technical perspective when I'm looking at the 1 day candles. Okay, so this looks like a solid signal that's already up in profit if you had gotten on it earlier today when it was back closer to the pivot line. But for me, I feel like it's not the opportunistic entry point like the last example that we looked at. But that's where each trader has his personal preference. And so you might still act on a signal like this, even though it's not as opportunistic of an entry point, because it certainly does show momentum in the direction of the signal. Others might choose to wait for a pullback. So if I go to the smaller candles, I can look at 15-minute candles and say, wow, yeah, it looks like it's really been running up today. And boy, I would have liked to have looked at this signal maybe a few hours back in this area back here. So maybe if this has a pullback, maybe I would be willing to buy if it pulled back to a support level like down here. Okay, 2641, which would still be above the pivot level, but down in this zone here. Why do I choose 2641? If you go across, this would be a natural area of support here because it was resistance in the past right here. And so if it pulls back to this price, it might find that at this area, it bounces, that you might find support here because old resistance becomes new support. Once it breaks above like it did here, it acted as support today before bouncing up further. So if this pulls back and I want to buy with that signal, I might look to do it from here. A little bit better entry point than where it is right now. And my stop loss then might be down below that support down here, because if it continues to break that support level, then that signals a larger downtrend on the candles. Okay, so in this case, I might do a pending order rather than a market move, and that's very easily done. I can put my buy to go with the signal. I can say execute if the price hits 26.42, let's say, just above the support level. If it hits 26.42, then maybe I'll buy. And at that point, then my take profit would still be up at 26.85, because I thought that looked like a better resistance level than even what I saw in the signal. So 26.85. Whoops, no, execute at 26.42. Take profit 26.85. Okay, and my stop loss then would be somewhere below my entry. So if I'm going to enter at 26.42, if it breaks the support level down far enough, then I'd be looking to get out of the trade if it confirms a further downtrend. And so that's up to each of you. The signal had it down further, okay? But I could be more selective with my stop loss as I see it and say, you know, if it breaks this support level here and then comes down and breaks this little support level here, then maybe I'd get out of the trade with a small risk around 26.36. Okay, so stop loss 26.36. And so I'd be looking to make a lot more profit, 15,000 compared to my risk. And when I see that ratio, I think I can be a little more patient with my stop loss then. So I'll go down and get below this support level as well with my stop loss, so that it really would have to reverse into a larger downtrend for me to give up on the trade. So 26.33 or so. And so now I'm risking about 1/5, a little bit more than that, but about 1/5 possible loss compared to possible profit. Okay, and at that point, then I could say, you know, maybe I'm willing to take profit a little sooner too. I'll be a little less greedy and say at 26.80. Now I'm still better than 4-to-1 ratio, and now I'm more likely maybe to have this come to fruition if indeed it does trigger a trade from down here to buy. And now I can adjust my trade size to be the amount of risk I'm comfortable with now that I have my technical setup with my entry down here around 26.33. And my take profit, if I go to larger candles, up at 26.80 or so, right about here, which would be just before this resistance level. So I wouldn't have to break above that to hit my take profit. So take profit here, stop loss at the second line down here, which is 26.33. Okay, and so I can now adjust my trade size. If I do one lot, I'm risking 900. If I do 0.75, that might get about close to my 1% risk on my account. Okay, 0.72, and I'm risking about 600. Maybe it's 0.7 even, 630, 0.68. And now I can see I'm risking 612. And so I've zeroed in now with my risk management, 0.67, risking almost exactly 1% of my account to make more than 4 times that with this move. Okay, so then I place that into action. You see over here, it's listed as an order and not an open trade, not a position. Why? Because it's a pending order. So this one I was selective on. I'm waiting. If this hits the trigger price, then I'll be in on that buy move. And as we approach the NVIDIA numbers coming out, this easily could reverse and pull down to a better entry point. So we'll see. We made one move less selective with a market move, and one move where we're a bit more patient with a pending order. And each of these is based off of a technical signal from Trading Central, and also taking into account what's happening fundamentally to see if it at least doesn't work against us in our mind. And hopefully we're choosing trades that the current fundamental news actually puts wind at our back, so to speak, along with the technical advantage that we're seeing in the technical analysis. Okay. What else could we look at? How about crude oil? Crude oil is interesting. The crude oil inventories out in the U.S. came in today, if you check out the economic calendar. And what we see is the inventories came in lower than expected. Now, that's usually meaning, if the inventories are lower than expected, it means crude oil is being used maybe faster than expected. And that could maybe be bullish for crude oil price. It's certainly bearish maybe for the U.S. dollar if it's paired against crude oil sometimes. But it's not always a 1-to-1 ratio that if crude oil inventories are lower than expected, that means crude oil price has to rise. But if we combine the fact that inventories were lower than expected, and there's some fear in the Middle East about war still, then maybe we start to think if we get a proper technical setup, maybe I'm interested in making a move, maybe to buy on crude oil. But we've got the U.S. dollar kind of strengthening today with some fear. So it would be an interesting look anyways to see what's going on. We almost have competing fundamental news where some of the news looks like it should pull crude oil down, and some of it could cause crude oil to go flying up if there's some breaking news out of the Middle East with the war situation. So if we look at the signal, it's a buy, which is kind of what I was thinking it might be. Then we take a look at the technicals, and it's sitting right on the pivot line. It's like it's not bouncing off the pivot line. And really that doesn't surprise us, right? Why? Because we know the USD has been strengthening today as a safe haven currency. And so this looks like a signal that isn't one I would necessarily say the fundamental news supports. I think it's mixed news. You see it says the market has reached a key level already. Why does it say that in the signal? Because it hit the pivot line, which cancels the buy. That means there's enough downward pressure if it broke below the pivot line that you could think about selling on crude oil. And in this case, because we have a situation where breaking news about the war situation in the Middle East with Israel and Iran and now Iraq, maybe with threats about disrupting crude oil supply purposefully from some actors if war does escalate, I think you're kind of playing with fundamental news that if you do sell here, that could work against you in a matter of one headline to shoot crude oil back up. So if I was selling on this, it's a short-term move. I want to get in and out before a new headline about something happening with the war situation in the Middle East could change things. So I'd be looking to catch the current momentum with this broken pivot line to take a quick profit potentially if I wanted to sell with this. Why would I not buy with this buy signal? We talked about it. It broke the pivot line. It's not bouncing off of it like you'd expect if it really wanted to bounce and go with an uptrend. And we've got competing fundamental news maybe working against this signal. And so you can see how you can selectively pick which signals you'll follow and which ones you won't based on what's the current fundamental news, what's the current sentiment along with the technical signal, because that's the part that sometimes can change after the signal comes out. All right. So let's take a look maybe on smaller candles. What's happening here? 30-minute candles. We see it's only a recent drop in the past 3 hours. Crude oil was climbing off of this support level. I mean, this support level, the pivot line, is basically right here. Okay, it was this support level. Support. You see it was hitting on the 30-minute candles and staying above and bounced. Okay, came down and tried to go up again. It's only in the past 3 or 4 hours we see this come down and now break the pivot level. Okay, earlier on, it was a successful signal almost, and then down it went. Okay, it does look like a good sell signal to put your stop loss above the pivot. Very little risk now to get your stop loss above the broken support level, and your take profit could be at the first support level down, could easily reach before any big news changes, right? The big news could be NVIDIA, by the way, as well. That could swing things around. If NVIDIA's numbers come out really spectacular, you could see optimism hit the market, and usually a strong optimistic market anticipates more energy demand, and so you could see crude oil spike back up if the news is better than expected from NVIDIA. And the opposite, if it's worse than expected, you could see crude oil potentially move the other way. Leading up to those numbers, the speculation seems to be creating downward pressure, fear that the numbers might disappoint. Okay, and we're seeing that here. As I speak, it's dropping. So if you wanted to sell in this scenario, very easy to set up and do your risk management. Take profit down at the first support level down here, 68.54. Okay, for a market move I'm talking about. Stop loss above the, and we missed it. As we're setting it up, there it went. You see it just plunged down. It was just, as we were talking, just below the pivot. So a pending order here would have entered automatically. And a lot of times with those signals, if the primary move doesn't look good, you just put a pending order on the other side of the pivot. And if it does break the pivot, boom, you're in. And you'd already be way in profit halfway to the take profit down here. What I was setting up is take profit at the 68.54 price and stop loss above the pivot. But it already plunged down. Now I don't like the entry point. Okay, it's not as opportunistic. But if I do put my stop loss above this broken support, that's at about 69.25, 69.25, we see it's still a little better take profit than risk, but not as nice as it would have been just 5 minutes ago. Okay, and that's where trading is about timing as well. And we can see if this will pull back up for us. Now we're getting a better ratio. It's trying to pull back up after that surge down. If we go to 5-minute candles and get a better look at this and see, here's the plunge as it broke the support level. This is what happens many times. When a support level gets broken, you see an acceleration of the movement. Okay, and we'll see if this pulls back a bit further. Maybe we go with the market move. Now it's 29.40 to 2,000, and maybe that's okay. Don't always have to have 2-to-1 ratio. So now I get the move in with my stop loss above the broken support in the direction of the technical trend. Now it broke the support level with the take profit further away. Let's switch candles actually. 2-hour candles with the take profit down here. Okay, so take profit down here, stop loss above the pivot, and I'm playing around here in a demonstration account. I would have changed the trade size like we did in the other trades to be my risk of 600 per trade or whatever I wanted it to be before I placed that trade. Here I placed it a little larger just to try and take advantage of that entry point. But you understand the risk management side of things as well. I could have easily changed that trade size before placing that trade. In this case, I'm risking a couple thousand to try and make near 3,000, something like that. But it probably would have made more sense to lower that trade size before pressing go on that move so that I'm risking the amount I was demonstrating with those other trades. And that would be done with 1 or 2 clicks very easily with the trade size before clicking the final command to sell on this. Any questions, comments before we end the session? We've been going for a good 35 minutes. I haven't seen any questions, so I must be clear so far. And I see nobody's dropped out since joining based on the number of attendees, so it must have been interesting enough as well. Any comments or anything before we end things? I'll pause for a moment. Okay, great. And yes, it was a good example of how we avoided buying on the buy signal because of what we saw with the fundamental news that we talked about and in terms of the sentiment, and we didn't see the bounce off that pivot line, and we took advantage perfectly Otherwise, we'd have probably already hit our stop loss buying on that buy signal if we didn't pay attention to that pivot line and the current sentiment. So it was a good example of how to avoid getting into a bad signal as well as those other signals that we thought looked better that we did follow. All right, everybody, thank you for your attendance and good luck with your trading the rest of the evening. Bye for now.